What's going on, and welcome back to another episode of the Mortgage Mindset. I'm your host, Trevor Otsuka. I'm a licensed mortgage advisor with Barrett Financial Group, and I lend on commercial, residential, and private money for fix and flip. Solo show this week. We're going to dive right into this week's market update. So today is Thursday, January the 9th, 2025. And for mortgage interest rates, we're going to have 30-year fixed conventional. This information, by the way, is from mortgagenewsdaily.com. This is a free website. They also have a free mobile app. So if you're in the industry or if you're just a savvy consumer and you want to know really where the market is trending right now as far as interest rates for residential mortgages, this is a fantastic tool. So 30-year fixed on Mortgage News Daily, you're at 7.15%. For a 15-year fixed, you are at 6.51%. 30-year jumbo is right around 7.38%. For a 30-year FHA, we are sitting at 6.48%. And for the 30-year VA, we are at 6.5. So relatively flat in comparison to last week's show. Let's dive into econ data. So this week we had jobless claims that came in on Wednesday. Let me back up. I'm sorry. Monday, January the 6th, we had S&P Global Services PMI. We had ISM non-manufacturing PMI for the month of December. We had FOMC minutes, which is basically like a Fed press conference. And then the big item is actually happening tomorrow. So when you guys are listening to this podcast, when this newsletter actually gets sent to you, this econ data would have already been released. So everyone's kind of just waiting on pins and needles of what's going to happen with this econ report tomorrow. You have unemployment rate month over month for December. And then you also have the non-farm payroll jobs report for December. Now, these two reports over the course of the last 2 years have had huge impacts on traders for the bond market and then also treasury yields. So I would anticipate tomorrow is going to be a big swing, most likely. Hopefully these reports are going to come in right at expectations and the market will just stay level, stay nice and flat to where it's at. You do have President-elect Donald Trump that is supposed to be taking office in 11 days. That'll be on January the 20th. And the big question mark is about his economic policies. What are they going to do to all of these inflation metrics and the data that the Fed looks at every single month that drives their interest rate decisions through the year? Originally, they were planning on 4 interest rate cuts or Fed rate cuts for 2025. And then with the most recent dot plot at the most recent Fed rate decision, they reduced that to an anticipated 2 cuts. So we will see. We'll see what's going to happen next week. See what we got here. Oh, big one on Wednesday. You've got month over month core CPI, which is a huge measure of inflation. And then you also have year over year core CPI as well. So both of those are going to be coming out on Wednesday at 5:30 in the morning. That's pretty much the biggest item for next week. This week's news article headline. Okay, so everybody knows what's going on in Los Angeles with what is probably going to be considered one of the worst wildfire natural disasters that have happened really in the country. I saw a statistic on there that said that the anticipated dollar amount losses were estimated to be over $50 billion in damages. So again, that's 50 billion with a B, which is absolutely nuts. If you guys are from LA, if you have family in LA, my thoughts and prayers are with you guys. I can't even imagine if you had a home and you had to evacuate and you were just watching your home burn to the ground as fiery winds were just ripping through your neighborhood. It's crazy to think about. I found an article here that talks a little bit about that. It is from Housing Wire, and the title of the article is "What Happens to Insurance Premiums After the LA Wildfires." So I don't know if you guys knew this, but insurance premiums for auto and then also for home dramatically increased over the course of the last 2 years. It's been a while since I've seen a stat on this, but I think they're up 50% since 2022, which is a pretty dramatic increase. So when you have something like this, which is a natural disaster, the property values in Los Angeles County are higher than a lot of other places in the country. You can imagine that homeowners insurance premiums are more than likely going to go up because there's going to be people that are trying to file fire claims. State Farm is one that completely cut off any of their binder policies. So let's talk about this one. I got some talking points on here. So the immediate impact of wildfires on real estate and housing demand. Wildfires in Southern California have destroyed over 1,000 structures and displaced tens of thousands of residents, creating an urgent need for short-term housing solutions. Real estate professionals are actively seeking lease opportunities and short-term rentals to house displaced clients, highlighting the strain on the already tight housing market. I saw some pretty cool stuff as far as the community coming together, people that own boutique hotels or hotels that are in that area that are offering free room and board to help anybody that has been impacted by the wildfires in Los Angeles County. So I think that's beautiful for the community to come together like that. It's unfortunate the circumstances, obviously, but I think it's pretty amazing the power of people and community when people come together to help each other. The second point here is challenges in obtaining and affording home insurance in high-risk areas. California homeowners face significant challenges with rising insurance premiums and cancellations by major providers like State Farm. New regulations allowing insurers to reprice risk based on catastrophic models may lead to higher premiums, further exacerbating affordability issues and impacting real estate prices in wildfire-prone zones. So to me, when I read that, that tells me that it's highly likely that if you are in an area that they mark as a wildfire prone zone where they could even say that if there was one single historic wildfire in that area at any point in history, they could say that your area is wildfire prone, and they would increase your premium. They would put an adjustment on that annual premium for the homeowner's insurance. I'm almost certain that that's what they're going to do. Number 3 here is the evolving role of homeowners in managing risk. With insurers retreating from the market and coverage models under pressure, homeowners are increasingly required to take proactive measures to protect their assets. High net worth individuals, in particular, are turning to specialized risk management strategies and bespoke insurance solutions, signaling a shift in how property protection is approached in disaster-prone regions. So I thought this was kind of interesting, this article. I know a few insurance brokers. One of my buddies, Shane Nicholas, is an agency owner for Goosehead Insurance out here. And we had a conversation just this last year about how all of the insurance policy premiums work and why he believes that there were increases on the back end and why people are paying higher premiums. Some of them are up 40% from what they were paying just the previous year. So I would be curious to get his perspective on this. Maybe we'll get him back on the show again this year, and we could talk a little bit about insurance and how they're related to wildfires like this or natural disasters in certain areas of the country and what that would do to policy premiums. So that's going to do it for this week. Again, reminder, huge day tomorrow. Okay. So by the time you listen to this, that econ report would have already come out for non-farm payroll jobs report, and then also for the unemployment rate. So hopefully tomorrow will be a great day. Hopefully when you're listening to this, we got some market improvement and rates are slowly starting their descent downward, which would be amazing. So I'm optimistic. I hope it's going to happen. We'll see. Anyway, I hope you guys have an amazing, amazing week, and we will see you guys next week. Bye-bye.